The allure of gold as an investment has persisted for centuries, but in the ever-evolving landscape of the 21st century, investors must question whether this precious metal still holds its traditional appeal. This video explores the investment merits of gold in the context of the 21st century, examining historical performance, its role as a hedge against economic uncertainty, its correlation with other assets, and the influence of contemporary market conditions. Welcome back to Caffeinated Money, your go-to source for financial education and stock market insights. I'm your host, Mike, here to help you brew up some financial success. In today's video, we're going to dive into if you should invest in gold. Whether you're a seasoned investor or just starting out, we've got something for everyone. So, grab your favorite cup of joe and let's get started. But before we do, if you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss out on our latest tips and tricks to secure your future. Let's get into it. Historical performance of gold. One cannot discuss gold without acknowledging its storied history as a store of value. Over millennia, gold has demonstrated its resilience, preserving wealth through wars, economic crises, and political turmoil. Its historical performance, characterized by periods of significant price appreciation, offers an initial argument for its continued relevance. However, the crucial question is whether this historical performance is indicative of future potential. While historical data shows that gold has appreciated in value over time, its performance has not always been consistent. The 21st century has witnessed periods of both bullish and bearish trends in the gold market. Factors such as the 2008 financial crisis led to a surge in gold prices as investors sought safe havens. Yet, other periods have seen relatively stagnant or declining prices. Thus, while history provides a solid foundation, it is not sufficient to determine gold's contemporary investment worth. Gold as an inflation hedge. One of gold's most enduring roles is as an inflation hedge. The 21st century has been characterized by fluctuations in inflation rates, driven by changing economic dynamics, central bank policies, and global events. During inflationary periods, gold has often been viewed as a reliable asset to preserve purchasing power. Recent years have witnessed debates about the persistence of inflation in a digitized, globalized world. While gold remains a popular choice to hedge against inflation, the effectiveness of this strategy is contingent on inflationary pressures. In the 21st century, economic policies and technologies have transformed the traditional dynamics of inflation, which raises questions about gold's role as an inflation hedge in contemporary times. Diversification benefits. Diversification is a fundamental principle of modern portfolio management. Gold, with its low correlation with traditional assets like stocks and bonds, offers diversification benefits. This can help reduce overall portfolio risk. In the 21st century, the importance of diversification has not waned. However, investors now have access to a wider array of assets beyond gold, including cryptocurrencies, which have gained popularity as alternatives for portfolio diversification. This evolving landscape prompts investors to consider whether gold's diversification benefits remain as unique and attractive as they once were. Market conditions and contemporary factors. The investment landscape in the 21st century is marked by unprecedented global connectivity, rapid technological advancements, and unconventional monetary policies. These factors influence gold prices and investment dynamics. For instance, the impact of low interest rates on gold's opportunity cost is a consideration unique to the current century. Furthermore, the emergence of cryptocurrencies like Bitcoin has provided investors with alternative assets that exhibit some characteristics traditionally associated with gold. In conclusion, the question of whether gold is a good investment in the 21st century is multifaceted. Its historical performance and role as a hedge against inflation and economic uncertainty offer compelling reasons to consider it in a diversified portfolio. However, the 21st century's unique economic, technological, and financial landscape presents new challenges and opportunities for investors. Ultimately, the suitability of gold as an investment depends on individual financial goals, risk tolerance, and the broader market context. While gold remains a relevant asset, investors should evaluate it within the context of a diversified portfolio that accounts for modern investment alternatives and dynamic market conditions. Gold's enduring appeal may persist, but in the 21st century, it is not the sole answer to the complex question of wealth preservation and growth. Hey! That's it for today's deep dive into the world of finance. I hope you found our discussion on investing in gold insightful and valuable. Remember, the key to financial success is knowledge, and that's what we're all about here at Caffeinated Money. If you enjoyed this video and found it helpful, don't forget to hit that like button and share it with your friends who might also be interested in growing their wealth. Your support helps us create more content like this. And if you haven't already, click that subscribe button and the bell icon so you won't miss out on our future videos. We've got a lot more financial insights and stock market tips coming your way. Before we wrap up, I'd love to hear from you. What was your biggest takeaway from today's video? Do you have any questions or topics you'd like us to cover in future videos? Let us know in the comments below. Remember, the journey to financial success is a marathon, not a sprint. So, keep learning, stay invested, and let's make that money work for us. Until next time, this is Mike, signing off from Caffeinated Money. Stay savvy.